Welcome to Apex Private Wealth's first quarter wrap-up of 2024. March was a much stronger month for markets in South Africa. However, given January and February being negative, we've actually seen that the quarter landed up closing the month in negative territory. Financials and resources weighed on that. However, industrials managed a positive performance, but what we saw quite surprisingly was that precious metals lifted the broader index up. Economy only grew by 0.1% in the last quarter of 2023. We've narrowly avoided a recession, and inflation has actually surprised on the upside. Annual inflation in February accelerated to 5.6%, while core inflation increased to 5%. This has ultimately led the Reserve Bank to keep the repo rate at 8.25%. Global equities, very strong quarter there, several markets reaching all-time highs. This is given by hopes that the US would have a no landing or a soft landing and the ongoing optimism around artificial intelligence. The Nikkei in Japan saw its strongest performance since the global financial crisis, propelling it to its previous record high from 1989. Economic data generally being positive. We've seen the US Federal Reserve cautioning around interest rate cuts that's been moved out to September potentially, with only 3 cuts for this year. US, the S&P recorded another double-digit gain for the first quarter. We've had no less than 22 all-time highs on the S&P, and again driven by the Magnificent Seven and particularly by Nvidia. There are some concerns around commercial real estate, which started to have some murmurings in February. Chinese equities were lower for the quarter, but there was a sharp positive momentum swing in February just before the Lunar New Year, when Chinese authorities decided to intervene to help stabilize sentiment towards the equity market, which has now declined to 5-year lows. The head of the Chinese Securities Regulatory Commission was also replaced. Emerging markets, positive for the first quarter, and Asian emerging markets being one of the biggest benefactors there, particularly Taiwan and South Korea. Indian equities powered again higher, driven by GDP growth, while emerging Europe, Turkey was the sort of standout there, as runaway inflation sent those investors into equities, and particularly in the tech space. European markets closed the first quarter around 7% higher as inflation data continued to show that pressures from higher prices are cooling, and the new buzzword out of Europe is the granolas, which are 11 pharmaceutical, tech, and luxury companies that have accounted for more than half of that gain in the period. Central bank has left interest rates on hold, and wrapping up, we've seen gold price hit new highs in March.